Since 2015, we've been hearing something along the lines of beverages are about to take off, and a prediction that makes sense with cannabis kind of gaining ground as an acceptance and alternative to alcohol. The substitution of cannabis for alcohol has become popular, with the term Cali sober popping up to describe the behavior as consumers look to replace alcohol. What better way to do that than with infused beverages? But we're going to take a look at some data here, a report from Hedge looking at predictions that haven't really panned out over the last 5 years. Beverage market share has maintained about 1% of total recreational cannabis sales, with sales to the category roughly at the same pace as the total market. So today, we're going to take a look at a long line of some bullish reports on beverages, between advancements in infusion technology and the myriad of new brand catering to the occasional low-dose consumer. There's a lot of reason to believe in the growth potential of infused beverages. So this report provides an understanding of where beverages have been, where the category stands today, and where we believe it's going. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. We're going to take a look at a report from Hedge on beverages. So we can see in the U.S., the beverage category market share has held steady between 0.85% and 1.1% of the last several years. So market share to the category is slowly decreasing through late 2019 and early 2020 before maintaining just below 0.9% during the beginning of the pandemic. However, the category has been regaining ground since the third quarter of 2020 and looks to be well positioned to reach an all-time high as U.S. reopens post-pandemic. Beverages are really expensive by comparison to other edibles, which is probably why there's a decrease in the amount of consumers buying them, is because the value isn't quite there. They don't even have infused coffee. It's too expensive. Washington State, home of Starbucks, has no coffee. Portland does to a degree, but it's $12 to $17 for a 12-ounce cup of coffee that's infused. So not really something that you're going to buy on the regular when you can just get a cheaper edible, $10 for 100 milligrams. So I think that as soon as we can kind of see beverages decrease in price, along with the FDA allowing for CBD infused beverages, I like that 1-to-1 CBD to THC ratio. We're going to have to see a lot of regulations and changes and a decrease in price. Maybe even full federal legalization. It's really, beverages are the most difficult product to sell, one of the most competitive with the smallest margins, and so it's not the same as just making a candy bar. So until you can cross state lines, I don't think you're going to see a proliferation of cannabis drinks because it's just too expensive to do the same way that you can cultivate flower or make gummy bears. It's just way too expensive. And so you saw kind of companies going away with CBD after the FDA started implementing some rules. Not good for the industry, but maybe there'll be a rebound. So I mentioned that Canada's market share to beverages surpassed the U.S. in less than half a year, stabilizing around 1.5% of total cannabis sales. So now we're going to look at a basket penetration of beverages by month, so we can interpret that if there's 100 total cannabis transactions, how many contained a beverage? So that trend in Canada looks similar to the previous market share graph. So it's rising quickly through the first half of 2020, stabilizing late summer, and then that's around 4.5% of baskets. So it's not a lot. Less than 5% are purchasing beverages versus, how many people were purchasing edibles last year at the beginning of the pandemic was a phenomenal rate, but they're not doing that with beverages. A lot of people pushed off topicals and tinctures and went straight to the edibles when the work from home kind of came in the lockdown. But beverages really didn't see a lot of that, still at around 5%. So basket penetration trend in the US, on the other hand, looks different from what we're seeing in the category market share. So we could see a relatively steady march upwards over time, rising from 1.6% in January of 2018 to 2.8% in February 2021. So even though the market share hasn't drastically increased, beverages are making their way into more and more baskets each month, indicating that more customers are trying THC infused beverages. But again, it all boils down to price and convenience. So the prices still remain high. They're just not going to have the volume and that they need to be an everyday or even every week purchase. So, how many people consume beverages in the US? Looking at the bullish attitudes towards beverages, we can look at the proportion of customers who purchase at least one beverage within the last 4 calendar years. So, here we can see that there's a 10% increase in the rate of purchase from 2019 to 2020. So, if that growth remains consistent, then at least 7% of customers this year will purchase a beverage. So, with less than 3 months of 2021 in the books, at the time of this podcast, the fact that 5.4% of customers have already purchased from the beverage category indicates that a strong positive trajectory for that category. Let's take a look at what else is in a basket with beverages. Is people buying that? What else are they buying? So in general, looking at beverages purchasing trends, we can see that the attachment rate for all other categories to beverage baskets in 2020, edibles, for example, they're present in more than a third of beverage baskets, indicating that there are frequent ingestible customers who are looking for multiple non-inhalable options in the same purchase. Also notable is the fact that only about 23% of total beverage baskets contain only beverages. So that indicates that beverages are still often an add-on purchase rather than a solo trip purchase. So let's look at who's actually buying them and which demographic group purchases THC infused beverages. The short answer is everyone, but of course that's not the whole story. So this graph is showing that sales index to beverages across age groups and genders. The index is a value that compares the demographic group's wallet share to beverages to the overall market share of the category. So if the index value is greater than 100, then that means that the group spends relatively more on average. So we could see that within every age group, female customers are more likely to spend relatively more on beverages than their male counterparts. And in fact, Gen Z females are the only female group to under-index that category. Gen Z males spend more on beverages, while millennial and Gen X males only slightly under-index in that category. So what type of beverages are most popular? To help understand what types of beverages are becoming more or less popular, we can evaluate the trends in sales shares by serving size or dosage. So it appears that consumer preference is solidifying around two distinct options: 100 milligram THC for maximum potency, or 10 milligram serving for a microdose. So most of the growth in the 10 milligrams or lighter section over the last few years has come from 0 to 5 milligram microdosing of beverages, which has risen 14.5% to more than 18% of sales this year to date. And that's definitely a growing trend. There's a lot of individuals who want 5 milligrams. They want something that's going to be very relaxing, but not something that's going to be too psychoactive. They don't necessarily want to get high. They just want to relax a little bit. So we're seeing popularity in pre-rolls go down to like a quarter of a gram, a third of a gram, versus, what everyone thought, which would be the full 1 gram and infused and everything else. They're finding that people want less and less of that. So there's hardcore, smokers like myself who would prefer, a 5 or 7 gram a Cannagar, but we're not the majority. The majority of people just want something real quick, real microdose, and we're going to see a lot more of that. Let's look at some packaging trend sizes. As I just mentioned, we're kind of getting smaller and smaller packaging. So between Washington, California, some of these states are trendsetters. In fact, we see a lot of stuff leaving California, like strains or products, and getting popularized in Colorado about 6 months later. And then 6 months after that, they kind of hit the rest of these regulated markets. So it's kind of important to take a look at who's leading those trends, what those trends are, which is all the more important of why these reports can bring some value. So looking at beverage sales trends, we can include sales from a lot of different markets. So we're going to look at some beverage trends that include sales from multiple states, examining 2020 sales shares to various beverage package sizes. between two distinct markets being California and Washington state. So the dominance of 100 milligram products in Washington market immediately stands out. There's 9 out of $10 spent on beverages going to a 100 milligram product, and there isn't a lot of room for anything else. So it could indicate a tremendous opportunity for Washington beverage brands, as in contrast, sales to products of 12 milligrams or less make up more than a third of California beverage market. That's interesting. I'd want to know how much that they're able to manufacture with a low milligram. A lot of people think that they can buy a 100 milligram soda and then just cap it off when they're done. They're probably going to pay the same amount. The bottle costs the same, the water costs the same. And to be honest with you, the milligrams of THC are just a fraction of the cost. So I can't imagine that the average retail consumer would want less milligrams for the same price. They would want to just cap that off and then consume the rest of it later. But, the stats here show that California likes their low dose edibles or beverages. I just want to know how much they're actually paying for those. All right, so let's dive in a little bit closer to that diverse California beverage market, highlighting some of the sales that 7 brands have broken into the category's top 3 by sales over the last couple of years. The purple graph shows the total sales of all other brands in California combined. So the incredible growth over the previous years can't be ignored. California beverage sales in January 2020 alone got $15.5 million. That's nearly 6 times greater than the 2.7 million recorded during January 2018 in the first months of recreational sales. And also worth noting that there's been an overall decrease in brand consolidation over the years. So in 2018, 32% of sales went to the top 3 cannabis brands, but in 2020, only 22% of sales went to the top 3 brands. So that's good. There's been a less amount of consolidation. So there's either more companies or, still the same amount of companies, but producing more brands. That's what's happening. In Washington State, we have the most brands out there, but they're parent companies. We don't have a lot of parent companies. They're just creating more brands out there. So the perception is that there's a lot of brands. The reality, not so much. So could be indicating an increase in diversity playing field as brands develop products that resonate with different types of beverage consumers, which is more than likely what's happening is they're just creating different brands for marketing purposes. So if we remove the sales to other brands from the chart, we can closely evaluate the performance of the top players in the California market over the last few years. We can see some brands like Kikiko, Cannabis, Quencher, they've maintained relevancy over time despite ceding market share to new brands who entered the market. Legal beverages, on the other hand, were unable to keep up or falling from third top selling beverages brands to exiting in 2020. Which is surprising because that's the only beverage company that makes soda in Oregon is Mirth Provisions or Legal Soda. They must have something going on with them where they're not able to keep up, and or they've been in the game so long they know that they can't continue to lose money like these other companies might be doing just to gain that market share. So something's going on with beverages, but like I mentioned, it's incredibly competitive, low margins, and companies that had first mover advantages like Mirth Provisions had to completely get out of the 5th largest economy in the world. So not a good sign. We just have to kind of see what happens. There's also some other success stories. Laguntas Brewing Company has infused THC. Keef Cola, local brand, then they're doing really well with marketing. I think they've got some brands in, or they have product in Nevada as well. Let's see what they're having to price beverages in order to kind of get away with staying in the market and not having to exit like Mirth Provisions did. So we're going to look month by month at the top 3 California beverage brands for total market average price and see that the brand, Keep Cola, for example, they're offering a value price product only slightly above market average versus Can that has a price that's almost 8 times higher than the average. Their 2 milligram THC social tonics are typically sold in 6 packs for a few dollars more than the average price of a 100 milligram beverage. Hard seltzer is seeing a huge resurgence. Budweiser and everyone else is kind of coming out with that. Pabst Blue Ribbon, they launched a 5 milligram seltzer in California. And so it looks like they're trying to get into the cannabis infused wines as well. So beverages are a pretty unique category within the cannabis industry. And so as we described, beverages sales tend in the US and Canada are found unique differences within different markets and brands. So just trying to keep track of cannabis brands in the industry as well as other categories and market data. So some key takeaways, recommendations, whatnot. Cannabis beverages shares held fairly steady in the U.S. over the last several years, but increases in basket penetration and customer trial rates indicate a promising future for the category as long as you can survive and have enough cash to do that. Beverages are still very much an add-on purchase and often in baskets with other product formats, so it should be positioned as such. Retailers should be considered placing them close to the register for easy cross-selling. Just like in grocery stores, all those beverages are at the very end caps of the register on purpose for the same reason. Consumer preferences toward beverages and less split by demographics than some other categories. So beverages relatively more popular among females and Gen X consumers. You might want to target towards them. Beverage market increasingly consolidating in two product types, either high dose or low dose. And then individual state markets, they're still prepared by the reality of federal prohibition and can be incredibly different from one another. 2 out of the 3 top brands in California finding success in microdose products and alcohol replacement. And then hard seltzer segment seeing a lot of growth in the past few years. So all your other beverage trends, you got to come back to the Talking Hedge and find out. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.